Hi, this is Acme with the Bulletin Board Heroes here at Zac's Traders Cafe for Tuesday, the 6th of June. Starting off with the FTSE 100, where we're between the 50 and 200-day moving averages, the grey line there around 75.30 in the 200-day line, and 50-day moving average is 77.10. Obviously waiting for an end-of-day close outside those particular parameters to tell us which way this market's going. You could say that with the 50-day line rising, in fact both the 50 and 200-day lines are rising, we are or should be biased to the upside, but obviously so far we've just failed at the old April support. That may only be a temporary factor, but below the 200-day line then we risk testing June support around 74.45 and perhaps even a worse dive towards the 72 to 7300 band, which was basically post-December support for this market. But at the moment, above the 200-day line, giving this market the benefit of the doubt. If you don't want to give it the benefit of the doubt, then you'll be waiting for the RSI to push above the neutral 50 level versus 42 at the moment, and a break of 76.30. Moving along to the DAX, and here a better market so far this year, but even here struggling a bit in terms of holding the top of that gap which was left on Friday. That was around 15,900, so we want to see that maintained. RSI still above neutral 50 at 51, so that's good, but really want a proper end of day close, another end of day close above 16,000 to give us the route map towards the top of that channel from back in September at 17,000, hopefully by the end of next month. On the downside, 15,700 looks as though that's the floor. That's been basically post-mid-April support for this market. On to the Dow, which kept hoping that it's going to break through the 1 year plus resistance line there at 34,000, everything hinging on that. We do have a rising 50-day line, which would normally suggest that we're going to go through and break that resistance line from April last year. On the downside, basically, it's the 200-day line in the floor of that channel from back in September around 32,700, which is the notional support. RSI above neutral 50, so at the moment we're still gunning for a break of that April 2022 resistance line, and 34,000 above that, the big target over the following 2 to 3 months up to 37,000, which admittedly seems rather unlikely at the moment. Below 32,700, risked 32,000 as a worst case scenario. On to Bitcoin, which has been undermined by Binance. We had the fear that 25,000 would be the support zone, well, the main support zone for this market. So far we haven't actually had to test that. Below that, it's the floor of the rising trend channel from this time last year, and the 200-day moving average at 23,000. Let's see if the Binance debacle balloons into anything worse than sub 25,000 for Bitcoin. If you're waiting for a trigger on the upside, the sensible one and the one we've been flagging is a break of the 50-day moving average and the April resistance line there around 27,700. Below that, one could just adopt a wait-and-see attitude. You can also see in the RSI window extended failure at RSI 50, and that has preempted the fall that we've had over the last 24 hours. On to the stocks, and quite a few in the news at the moment. African Pioneer, the first of them, and here we've had double unfilled gap to the upside, which was very healthy. We've had a sideways consolidation, which is also very healthy, and we've got a rising 50 and 200-day moving averages, so that suggests we're in the run-up to a golden cross. The run-up to the golden cross, typically the strongest part of the cycle, so that should suggest that by the end of next month we get up to the 4 pence level at the top of that broadening triangle from this time last year. If you're looking for a charting trigger, it would be an end-of-day close above that resistance line there from April. So basically anything above current levels, 3.1 pence plus, should do the trick on that. But remember that golden cross in the making over the rest of this week is a pretty strong signal, as is the double bounce for the RSI above neutral 50 that we've had over the last couple of weeks. On to Avacta, which has been one of the most difficult stocks to chart, apart from the fact that support has tended to come in for this stock around the £1 level, £1 to £1.10, that kind of thing, and it looks as though the shares are doing the same thing again, breaking that line of resistance there from back in February, and the 50-day moving average around current levels. Want to see 116, well, 117 or 18, which is the 50-day line, broken. Initially, then that would take us up to the 200-day moving average at 123, and then hopefully open up the prospect of a retest of 140 plus, the top of the post-March range. But early days yet. RSI's pushed through neutral 50, which is the reason for getting rather more optimistic today as opposed to the recent past. On to Audioboom, which has been one of the more horrible stocks of the last year. Here we've had a persistent decline, still waiting for, as I said yesterday, a break of that resistance line there from back in March. That's around £3.10. If we can break that, then it would be the top of the triangle from April, around 385 as a best case scenario. But obviously, that is a best case scenario. Probably the most likely thing would be a test of the 50-day line around 360, which is what we had in March prior to a fresh leg to the downside. At this stage, looks as though we got a base in place around 280, given the way that on that dip the shares went to oversold territory, but still waiting for that £3.10 break on Audioboom. On to Ajax, and here first signs of a break higher within a falling wedge formation. Want to see 7.25 pence broken. If we can do that and break the May resistance around 8.5 pence, then we could be on our way to 13 pence by the end of next month. But the key here is breaking that February resistance line around the 7.25 pence level. We've come off very oversold territory as well. The RSI down to basically single digits, low single digits, so there should be a bit of momentum in there if we can break 7.25 pence. Moving on to a stock which pulled the rug from under the bulls recently, basically back in February, but it looks as though the slack has finally been taken up on barren oil around the 0.08 level. Want to see a clearance of the 50-day moving average for the first time since the beginning of March. That's around 0.12 pence, and above that then we'd be looking for the top of that triangle from February, as high as 0.17 pence by the end of next month. The other thing which we'd like to see is the RSI get it back above the neutral 50 level versus 49 at the moment. We haven't been above that, which is quite an achievement since the end of February. So bullish divergence and a break above RSI 50, and the 50-day moving average is what barren oil needs. On to Drumz, which is performing well at the moment. We wanted it to break the resistance line there from October at just shy of 7 pence, 6.9 pence. It's done that, and today the support coming well above that, which is good. End of day close above the now rising 200-day line at 7.9 pence should and could get the shares up to as high as 12.5 pence by the end of next month, and it would be surprising now if we had any price action, sustained price action back below the 7 pence level. Haven't covered Emmerson for quite a long time, and it's interesting at the moment because it looks as though the shares have found support there at the floor of a rising trend channel from February, persistent support there around 4.4 pence. Above that, we're looking for a break of the 50-day line at 4.8 pence to give us a target as high as 6.5 pence by the end of next month at that February resistance line projection. Genflow Biosciences also coming to life at the moment, and here trendline break from April, also bear trap rebound from below the 200-day moving average at 2.5 pence. We're looking for a break of the rising 50-day line at 2.95 pence to give us a retest of April resistance through 5 pence, hopefully by the end of next month. Unfilled gap to the upside, bear trap gap reversal was the start of the rally back in April, so that is why we are suggesting that this is a half full situation rather than a half empty one. On to CODEL, another stock where we've had the impression that the shares are ready to turn around, bouncing bear trap rebound from below the sharply rising 50-day moving average around 0.66, and above that 50-day line looking for a retest of 0.9 April resistance. Best case scenario for fans of the shares probably towards the 1.15 pence level at the top of that rising trend channel from back in October. If you're cautious, you wait for the RSI to push back above the neutral 50 level versus 48 at the moment, and you'd also be looking for the shares to break back above 3/4 of a penny and that April resistance line projection. But the recovery there in place, ideally, well, hopefully, while we're above 0.6, and we don't need to go back below that level again. Onto a stock which doesn't get much airplay anywhere, but it gets it here, Mercantile Ports, here where it looks as though we've got a broadening triangle base. I'd like to see the shares finesse the bullish divergence, their sharp bullish divergence, with a break above the 50-day moving average at 5 pence, and then head towards 7.5 pence at the top of that triangle as soon as the end of next month. One of the stars of the moment is Ondo, which is looking for leaks, water leaks rather than any other type of leak. And here we were hoping that a break of 20 pence would give us a target as high as 28 pence. That looks like it should hopefully be on its way by the end of this month. Plenty of time to go. And ideally, there's now no support or test for support below 22 pence ahead of 28 pence plus. If you're a fan of the shares and looking for greater glories, some enjoy doing that, then the next level up would be the resistance line I'm drawing there over the next couple of months, as high as 40 pence, maybe over the course of the summer, i.e. by the end of August. So looking pretty chirpy there. Just 3 stocks to go now. First one is Premier, and here the rug was pulled, but then we've had a bear trap rebound from below the rising 50-day moving average. The initial target here towards 0.8. End of day close above 0.8, and we could be back at the best levels of the year through a penny, hopefully by the end of this month. Moving along to the last two, quite logically, here we've got Union Jack Oil. Here you can see that the shares have made an attempt at breaking the 200-day moving average. Support here, I suppose, back at the breakout level, 25.5 pence. Above that, we're still looking for a potential move up to 32 pence as soon as the end of next month. That should be plenty of time after the little kickback that we've had, or knockback that we've had from the 200-day moving average. While we're above that rising 50-day line near 25 pence, we should be home and dry in terms of 32 pence as a target there. Next up, one of the best charting situations of the recent past. Started off with some requests and a trendline break there at 1.3 pence back at the end of last month. I think the first target was the 50-day line, or it was actually around 2 pence, and that gap there, then the 50-day line around 2.25, then 4 pence, and then finally we've been going for the best case scenario target as high as 6.5 or even 7 pence. The shares made a good attempt today, hitting 6 at a peak, but hopefully we'll have 7 pence or more by the end of this month while we're above 4 pence. That's it for me today. More updates tomorrow.